Good morning, everyone. So, welcome back to another video of banking. In this video, particularly, we'll be talking about the banker and customer relationship. In order to understand what we mean by banker and customer relationship, is that whenever a customer is purchasing or buying any of the products from the bank, or in other words, when the banker is providing any kind of services or products to the customer, so they are entering into a relationship, and this relationship is known as banker and customer. So it changes with the nature of the product and services offered by the banker to the customer, or the various functions which are being performed by the banker towards as a part and parcel of their services or products to their customer. So in this video we will be discussing about one of the most important relationship, that will be our debtor and creditor. So the general relationship of the banker and customer can be divided into debtor and creditor relationship, agent and principal relationship because of the agency function or agency services provided by the banker to the customer, then pledgee and pledger, also known as on major upfront, bailer and bailee, lesser and lessee, advisor and client, where the customer is seeking advice from the bankers, and other relationships also, right? So particularly in this video we are going to understand the very first one, that is the debtor and creditor relationship between the banker and the customer. How bankers are becoming debtor and creditor, how customers are becoming debtor and creditor, what products and services are being offered, what products and services constitute the relationship of debtor and creditor between the banker and the customer, that we are going to take care in this particular video. So we are starting with the very first one, that is debtor and creditor. See, there are two major products and services that are also known as the functions of the banker. One is your primary, another is your secondary. So this debtor and creditor function or relationship is based because of the primary functions, that is acceptance of deposits and granting of loans and advances. So how this first function, primary function, when the banks are accepting deposits, so who is the debtor and who is the customer? And the same time when bankers are giving loans to the customers, granting of loans and advances, so who is the debtor and who is the creditor, that we are going to take care in this particular video. So debtor and creditor means, so we are just dividing the primary function into two parts, the two basic products. One is the loan or advance accounts. So in case of loans and advances, when any customer is taking loan from the banker, so in that particular case banker is the creditor and customer is the debtor. So most important thing is, in case of loans and advances, the banker is the creditor and customer is the debtor. Why it is so? It is because the customer owes money to the banker, because whenever a customer is taking loan from the bank, it means that the customer owes money and the customer has to return the money to the banker along with the interest. The banker can demand the repayment of the loan advances on due date, and the customer has to repay that particular debt. The customer remains a creditor until there is a credit balance in his account with the banker. A customer or the creditor does not get any charge over the assets of the banker or debtor, and the customer's status is that of an unsecured creditor of the banker. One most important thing is the last line, that the customer's status is that of an unsecured creditor of the banker. And why we are saying that customer status is unsecured creditor? Because whenever the customer is taking loan from the bank, he or she is depositing any kind of collateral to the bank. But when banker is receiving the funds from the customer in the form of acceptance of deposit, so banker is not putting any of its asset to the customer. That's why the customer is always having the status of unsecured creditor, because as a customer you depositing your money, banker is not going to give its asset to you as a collateral security. But whenever a customer is taking loan from the bank, in case of secured loans, see for example when a banker is providing home loans, so we are providing the documents of the property. Similarly, if in case of two-wheeler, four-wheeler or any kind of auto loan, hypothecation is being charged. Hypothecation is the method by which the banker is creating charge over that particular loan or that particular two-wheeler or four-wheeler. That's why it is recommended, it has been written, the customer's status is that of an unsecured creditor. Right now, on the second part, so when a customer opens an account with the bank, and if the account has a credit balance, then the relationship is that of the banker, and the bank is always the debtor and customer is always the creditor. Why it is so? It is just because whenever a customer is having a credit balance, so customer will look into his balance sheet that these are my cash in hand, whatever the amount is with the bank, that will be the asset side, which means cash at bank. So cash at bank means we are having an asset, we'll be taking it into the asset side. So banker will be known as the debtor and customer will be known as the creditor, because the customer can demand the payment, right? So in case of savings account, fixed deposits, current account with current balance or with credit balance, the banker is the debtor and the customer is the creditor. So the both important part is that we need to understand that in case of customer having an saving or current account credit balance, so the banker will be the debtor and the customer will be the creditor, and vice versa in case of loans and advances, where banker will be the creditor and customer will be the debtor. Now, and why this relationship is there? Because the banker owes money to the customer. In earlier case, the customer was owing money to the banker. Now the banker owes money to the customer. Therefore, the bank will be the debtor or the banker will be the debtor and customer will be the creditor. The customer has the right to demand back his money whenever he wants it from the banker, and the banker must repay the balance to the customer. Now, this is the principal fundamental difference or the relationship that is known as the debtor and the creditor. See, at one point of time, the banker is the debtor and customer is the creditor, and on the second point of time, depending upon the nature of products, when it shifted to the liability accounts to the asset side, so another relationship exists between the banker and the customer. But this is the banking relationship known as debtor and creditor. It is exactly different from what we can find out, what we can observe in the natural or the various commercial debts. So that also we need to understand the debtor creditor relationship of banker and customers differs from other commercial debts in the following ways. And the point number one, the creditor, the customer must demand payment. So one by one we will be coming for the further explanation of it. What we mean by this? We mean by this is that, say for example, A has given certain amount of money to B, which means that A has to demand the payment on due date, or the B should mandatory give the amount with the interest or the principal amount, even if A is not demanding. In case of banking relationship, it is not happening. The customer must demand payment. It cannot be said like, if I am having a savings account with the bank and I have not withdrawn my amount with the bank, so bankers will not be calling me and asking me to get the funds back. So there was no transaction, you should withdraw the amount, it is being lying with me from last 2 years, 1 year or 6 months. So it is not like this. So on his own, the debtor will not repay the debt. So if you will not be demanding, the banker will not be repaying the amount which is standing to the credit of your savings or current account. However, in case of fixed deposit, the banker must inform a customer about maturity, because maturity date is there. So once the FD and RD are mature, they will be automatically transferred depending upon the nature of fixed deposit. They will be transferred and credited to your savings account, the customer saving account. Now, point number two. Point number two talks about the creditor must demand the payment at the right time and right place. And what we mean by this is, in normal course of business, there is nothing known as normal time, right time and right place. So it can be by any mode, it can be at any point of time where the debtor and creditor, as per the terms, they demand money. Whenever they require, they can get the money. But in case of bankers relationship, these has to be the right time and right place. No, coming one by one, right time. So the depositor creditor must demand the payment at the branch of the bank where he has opened the account, or similarly in another branches also one can go, but the bank has to be there. So right time and right place means the branch of the bank, any branch of the bank the customer can get the money. Or but in case if we talk about today's scenario, so however today's some banks allow payment at all their branches and ATM also. Now coming to the second point, the depositor must demand the payment at the right time, and right time here refers to the working hours, working timing of the bank. So after closing of bank hours, or after the branch has been closed, the customer cannot go to branch manager's house and demand the money, or any other bank official's house or home, and cannot demand the money. So customer has to come to visit any of the branch, that is an on date of maturity in case of fixed deposit. So today banks allow premature withdrawals also. Before time also the funds can be given in case of fixed deposit and recurring deposits. Point number third is talking about the creditor must make the demand for payment in a proper manner. In a proper manner means, so if a customer wants to make a demand for repayment, it cannot be by a phone call, it cannot be via WhatsApp, it cannot be by any other mode other than it must be in the form of check, withdrawal slip, pay order, or nowadays if we see banks allows e-banking facility, ATM, mobile banking, etc. So customer can get it, but in normal due course of business, it cannot be with the help of check, but a customer can demand his or her money over phone call, or by sending someone to the that particular party from whom he requires money. So this is the three important points that differentiates the normal relationship of customers or the business parties in case of loans and repayments from the bankers relationship of debtor and creditor. With these words, thank you everyone. Thank you so much.